IULs, indexed universal life, the hottest insurance product on the markets in the brokerage channel. The hottest one. It must be the best thing since sliced bread, because every single broker, every single agent, every single financial advisor is touting the IUL. So it must be the best, right? Can any of you in your ultimate wisdom tell me why all the brokerages, why the bank brokers, why the agents, why the financial advisors would tell you that an IUL is way better than a whole life? Please tell me that reason why. I got a question for all of you, and I got a question. Steven already knows the answer, but how many of you think banks are out there to serve you? Okay, how many of you think banks, like traditional banks, are there to serve you and actually do good by you? How many of you think that? Let's get a comment here. Someone's got to come in on that. I think everybody's tired this morning, man. I'm the only one out here on well, maybe not the only one, but on Pacific time, it's pretty early. How many of you think banks are there to serve you? Okay, Jimmy said none. Leo said none. Anyone on TikTok? What do you guys got over here on TikTok? What do you guys got on Instagram? Any of you think that banks are looking out for you or doing things for you versus them?
I like the banks. They give me a free lollipop every time I go in.
Yeah, you get that's the best thing you get at a bank. Hey, maybe you can walk into the bank and you get some of that shitty Keurig coffee that's probably not been cleaned, and you'll probably come down with septic something, from drinking it. But anyway, the whole point is banks are there for themselves. They're profit machines. And banks, what have they taught all of you to do with your money? Give up control. You go work for money, you work hard for your money, or you make money somewhere. And what do? The first thing you do when you have money is you take it to the bank and you deposit it in the bank, and it feels good. And then you grab a lollipop. And what does the lollipop wrapper say? Dum-dums. There is no other sucker brand found at banks. And if any of you in the United States can find me a bank that offers a lollipop that is not a dum-dum, I will send you $10 cold cash, just so you can take it into a different bank branch and see that most bank branches only serve dum-dum lollipops. So yeah, you're right, Leo. It's a sucker, not a lollipop. And there is a difference between suckers and lollipops. Now, it is a sucker because you're all suckers and you're all dum-dums for going in thinking the bank is working in your favor. You put your money in there, and the bank does not take your money and put it in a little box with your name on it. The bank moves that money. You gave up control of your money to the bank. And because of that, the bank makes 400 to 1,300% more than you do by moving your money. The bank just lends that money back out. How many of you have money in a bank account, but yet you go to that same bank and take a loan out when you already had money in the bank? Do you realize the bank's just giving you your own money back and paying you nothing and charging you a shitload for that? Oh, but I got a loan at 3%. Yeah, and how much are they paying you on the money you've got sitting in that bank account? Probably zero. All I can tell you is just look at yourself in the mirror. Go find a mirror. Look at yourself and just say, sucker, because that's what you are. Sorry, I looked in a mirror. I just had to try that to feel it. You're a sucker. You literally have money in the bank that you gave up control to the bank, and then you went back from that same bank and you took money from them at a higher rate. I guarantee you 400 to 1,300% or infinite amount more than what you are making if you're making zero. You are the dum-dum. You are the sucker because you've been lied to and taught that banks actually give two flying fucks about you and your money. They don't care at all. And then the government plays into this because they kind of have to, and that's what the Fed is all about. It is banking. So what is the tangible step? Go ahead, Stephen.
I was going to say, as bad as banks are, they can be very useful as well if they're, if you use them the right way. And that's the key, is you need to use the banks the way that they've been using you for so many years. So there was a nominee for the comptroller of the currency, which is basically a position that runs the banking industry. And the lady that was nominated for this position, Saul Amarova, she basically hates banks, hates private banking with, as we know it today, like Wells Fargo's and the Chase banks. She wanted to end all that. She wanted to end you being able to have a checking account. And she basically wanted the Fed to take over everything. So if you think banking is bad now, just imagine if the Fed had complete and total control over every single bit of your finances. And luckily, there's enough people still in our government and Congress that said, oh, hell no, that's not going to work. And she was forced to withdraw her nomination yesterday. So that's a little bit of good news moving forward. But you just got to learn how to use the banks, and it can be a very powerful thing.
Yeah, and I love Lisa's comment. She chimed in and said, I have my own bank. She has a privatized bank, and she said, I paid cash for my car and I'm making payments back to myself. Now, most people that don't understand privatized banking and the infinite banking concept probably listen to that and like, wait, if you paid cash for the car, why would you make payments back to yourself? Well, because we all know that banks make a lot of money, right? 400 to 1,300%. So if you want to mimic what a bank does, well, then treat your money the same way you treat the bank's money. If you borrow money from the bank for a car, you make monthly payments to that bank. And if you miss a payment, they take your car and your credit gets shot, right? We all understand how to finance a car. So if you start thinking like a bank, which is the smartest thing all of you can do, because what Stephen was saying is banks are good because of this or that, and because they give you suckers called dum-dums. But banks are also really good because they have figured out a lot of the shit that we need to learn. And all of you are blind or just ignoring it. But if all you did is study banking, and I know it's a dry, boring topic, but if all you did is study banking and you went out and you literally mimicked what a bank does every single day with your money and everybody else's money, and you mimic that, do you realize how wealthy you'd be? Well, Lisa does, because Lisa said, you know what? This is pretty cool. I'm going to do exactly what the bank does every day, but I'm going to treat my money, okay, my private bank, which she did. She doesn't have a physical bank. She's got her own privatized bank. And I'm going to treat my money the same way as I treat the bank's money. Okay, so she takes money from her bank and buys a car. And then what she does is she figures out how much the bank, the traditional bank, would have charged her monthly for that car, principal and interest. Because I don't think any of you are getting loans that are just, there's no interest. Some of you maybe, but it's not real. Principal and interest. So she says, okay, the payment on that car is going to be hypothetically $700. She says, I'm going to set up a bill pay and I'm going to pay my bank back $700 a month. Do you all real? So some of you are thinking that's so stupid. Why would you ever do that? Well, we want to know why? Because Lisa will get all the money back for every single car she ever buys, drives, and owns by applying that one banking strategy. Because you know what she did? She took back the banking functions into her life instead of giving up the banking functions to the greedy big banks. Do you realize how brilliant that is? Do all of you even understand that concept? But then she went an additional step and she used a vehicle to hold her capital that pays her uninterrupted compound interest, meaning her pile of money that she started with never stops earning interest for the rest of her life, even if she uses it to buy cars, invest, do private lending. Lisa does a lot of private lending, which I want all of you to just think of that one thing. I know crypto is attractive. And listen, me and Stephen, we both invest in Bitcoin, Ethereum, and crypto. I know Stephen's played with Dogecoin and Shiba Inu, and listen, we might do it very different than all of you, but we're in the game. We're not saying we hate crypto. I think it's around for a while, but I would be very careful with shit coins. But fundamentally, the one thing all of us do, whether it's Lisa, Stephen, or anyone on this team, we also practice banking. It's called the infinite banking concept. We use that concept and that process in our lives day in and day out. And that's what Lisa's doing. And kudos to her. So does everybody understand that? So BB Singh, let me comment on this. He's on TikTok. He said, but the car depreciates in value. Point taken. Love it. Cars are one of the worst investments. I don't care if you buy a Ferrari, a G-Wagon, a Maserati, or an Audi. Okay. I don't care what car you buy. The second it rolls off the lot, it's going to depreciate. You're going to probably lose 50, maybe 30%, depending on when you sell the car. You're going to lose money. But BB Singh, I want you to think about what we just talked about Lisa doing, right? Treating her money the same as she treats the bank's money. Does it matter if the Audi she bought goes from $60,000 to $30,000 if she's making payments back to her bank and controlling 100% of all the money that she basically gets or pays for that car? It doesn't. Even though the car drops $30,000, it doesn't matter if her car goes from $60,000 to $10,000. That would be a really bad depreciation. It doesn't matter to Lisa or to us because we get all the money back for the car because we are the bank. So if we get all the money back already, at the end of the day, let's say it's a 3-year loan, a 5-year loan, a 6-year loan, doesn't matter. You're the bank, you set the terms. It doesn't matter if the car depreciates because all the money's back in your bank, even though the car's worthless. So if she sells that $60,000 car for $10,000, or if she just donates it for a charitable donation and gets a tax write-off, she already got all the money back because she made interest on all the money the entire time. Plus, she recaptured all the money she used to give away to the banks. Does that make sense, BB Singh? And then Sean, let's see. We got Sean. We'll just call you Sean Richson. What are the terms of the loan from your IUL? Oh, man. From your IUL. For some reason, everybody always thinks we're talking about IULs, and we are not. IULs do not work for this. Listen, I don't hate IULs. I think IULs have a place in the market, and it is long-term. You're not going to start an IUL and then immediately take money out and go buy a car. It's not going to work. What we use is specially designed and engineered whole life policies because those actually and forever. And if you think I'm wrong with this, then answer this question. Banks, in all their ultimate money wisdom and their smartness, why do banks not buy IULs? Why do they buy more whole life than any other company and anyone else in the world? They don't buy IUL, they buy whole life. Is it because they're stupid or because they know something you don't know? Well, we don't use IULs at all. We have done countless videos. If you want to learn about IULs and whole life and which one might be better for you, watch my videos on YouTube and subscribe to my YouTube channel. It's at the Chris Naugle. We post free videos all the time. Great content. So go to at the Chris Naugle on YouTube and watch the IUL video, and you will see the differences contractually between them. IULs. Why does everybody talk about IULs? I'm just going to hit this real quick, Stephen. Is that all right?
Yeah, man. I hate them for the record, but
and I'm not a fan. IULs, Indexed Universal Life, the hottest insurance product on the markets in the brokerage channel. The hottest one. It must be the best thing since sliced bread because every single broker, every single agent, every single financial advisor is touting the IUL. So it must be the best, right? Can any of you in your ultimate wisdom tell me why all the brokerages, why the bank brokers, why the agents, why the financial advisors would tell you that an IUL is way better than a whole life? Please tell me that reason why. Can anyone? Come on. We got TikTok, what the heck? Come on. Let's see. What are the terms of your loan? We'll get to that kind of, but I don't have the money. All right. So, all right, let me tell you why. How many times have you ever heard the slogan or the statement or the quote that says, follow the dollar and you shall find the truth? IULs pay the highest, and I'm going to go on record saying this, pay the highest commission out of any life insurance sold in the markets. The highest. The advisors that are selling them, and I'm not going to say it's always the same. We have good advisors like the one that works with Devin, Sam. He's the shit. And he's an IUL guy. They can be designed where they actually don't pay as much in commission. But IULs, the way that you know of them and your financial advisor is selling them to you, can pay anywhere between 80 to 120% of premium. That's right. So you, as the client that buys this awesome new product called an IUL, you put $10,000 into it per year. Do you realize that advisor made either $8,000 to $12,000 in commission for you setting up that plan? How many of you would recommend that to your clients if you were greedy and chasing commissions? Listen, I'm not going to lie to you. All of you would. All of you would. Wow, for every 10 grand somebody puts into this IUL, this awesome product that my brokerage says is the greatest thing, I make $8,000 to $12,000. Sign me up, motherfucker. Right? That's what happens. But then you learn about this product called a specially designed and engineered whole life that has been used for hundreds of years and that the banks buy more of than anyone else. But then you learn that to construct it so it works for banking, you have to take a 90% cut in commission. So now let's now remember, I want you guys to follow me. The IUL paid you $8,000 to $12,000 for every $10,000 in premium deposits your client makes. Just remember that. That's the IUL. The specially designed and engineered whole life pays you roughly $387 for every $10,000. So you're either going to make $387 or you're going to make $8,000. If you're an advisor, which one are you talking about? Do I need to say any more? Does everybody make fucking sense of that? If you follow the dollar, you find the fucking truth. What part of that don't you understand? IULs aren't the best thing. They just pay the most to the advisors. Get out of your own head and learn why people do things. Why is term insurance one of the highest, most talked about life insurance products in the insurance world? Does anyone know? Because they only have to pay out, the insurance companies only have to pay out on less than 2% of all of those policies. It is like 99% profitable for the insurance companies. Where are they going to put their marketing dollar? The whole life that they have to technically pay out on almost every single one if you keep the policy in force, or the term insurance where they know statistically, mathematically, and factually that they're only going to pay out less than 2%. Which one are you putting your marketing dollars to if you own an insurance company? Follow the dollar, folks, and you'll understand why the only thing you ever fucking know in your life is buy term, invest the difference is way better than anything else, or IULs are the best thing. It's because they're making the most amount of money. Wake up, folks. Wake up, America. Wake up, world. You have been lied to your entire life. That's a fucking fact, and we're telling you the truth. I don't give a shit if you believe us or not. I don't care if you like what we're saying or not. It's the truth, and it fucking hurts. I'm done, Stephen. What do you got to say?
I got nothing to say after that, man. I agree 100%. I mean,
I'm so mad because I deal with advisors, financial advisors. I spent 16 years in Wall Street. I know how they think. I thought that way. I did what they do. I sold the high commission products. I did because that's how I was compensated and that's how I was trained. When I retired from Wall Street in 2018, or I said that wrong, in 2018, when I retired and I started seeing what the wealthy did with money, and I learned that it was completely the opposite of what everybody else does with money, I started to piece it together. And I started to realize the big lie that I was telling and being taught my entire life. And I changed and I said, you know what? I'm going to teach the truth, which is what the wealthy do with money. And that's what we do today. And unfortunately, it is an uphill battle. It will never be easy. It will never just be, oh yeah, everybody believes us. No, because you're torn. Who do I believe? Who's telling the truth? Is my financial advisor that I trust telling me the truth? Or is this silly guy wearing a haters need hugs 2 shirt who doesn't have a fancy suit on? Believe me, I got a whole closet of very expensive custom designed suits. I just don't wear them. You know why? Because I've graduated from them. I don't have to wear them anymore because I don't have something to prove to you. I don't need to put a jacket on, a tie on, a fancy, like expensive shirt on just to convince you that maybe you should listen to the guy telling you the truth. No, I choose to put a baseball hat on, a fucking t-shirt, and wear flip-flops because that's where I am. And that's what I've earned the right to do. And with that being said, you guys can decide which side of the fence you're on.
You just follow them. You just follow the money. Just follow the money, right, Chris? I mean, one of the nice things about what we do is once they gets the concept of banking and understands the power of this, they can never go back. They're never going to go back to the old way of looking at banking and looking at money. And that policy is going to perform guaranteed for the rest of their lives. So we can go to sleep at night knowing we're not going to get hate calls 2, 3, 4, 5 years down the road. Hey, why the hell is this thing not performing the way that you showed me, especially when the market crashes? I mean, I almost feel bad. Hey, those IUL advisors right now are loving life. They're making a ton of money. They're buying boats and new cars. But what's their life going to look like in 2, 3, 4, 5 years from now when we hit a crash and we hit a bear market and things aren't as rosy as they are today, and those IULs crash and that cost of insurance year after year continues to go up and up and up and up and up and up, whereas our whole life policies, we sell them, we sit back and we sleep perfect at night because the cost of insurance on my 6-year-old son today is going to be the same cost of insurance he has on that policy when he's 60 years old. And that's a beautiful thing for them and for us. And that's what we do is win-win situations. And that's why I do what I do from morning to night every day of my life, because that's what I decided 10, 12 years ago. I'm never going to do business just to make money. I'm never going to do business just to get a quick win on something. I'm going to do what's right for people, what's good for the long term. And that's all I've done ever since.
Yeah. So I'm going to go to the audience here real quick because TikTok's got some great questions coming in here. So Sean said, what are the terms? I'm going to go back to that question that put me on my little rant about IUL. So let's just eliminate the IUL part. What are the terms of the loan from your private banking system, which again is what we use and what everybody that knows what they're doing uses, is a specially designed and engineered whole life, not the whole life you buy from your broke ass brother-in-law or the life insurance store. I want to be clear. It is a very different design, totally different than regular life insurance. So what are the terms? Well, the terms are the insurance companies, and I'll just use one particular company. I'm not going to name the company, pays 6% with dividends. Okay. So you're making 6. That's how much you're going to make on it as of 2021 and into 2022. You're making 6%. So if you take the money from that contract, and this isn't firmed up, Stephen, did we get the number yet for the new loan interest rates? 4.75?
I haven't heard officially, but yeah, it's coming.
Yeah, we don't officially know, but we know it's gone down a little bit. So let's just say you're making 6, and to basically take the loan from your death benefit, the insurance company will charge you 4.75. Can anyone just do the math for me real quick? If you're making 6% gross and your cost to use your money is 4.75, how much money did you make gross? 1.25. And if that money compounds every single year, so if you got money that's going in it and every year it's earning 6, so next year it's compounding, meaning you're not making whatever your money you have in there, it has gone up because you've earned interest. So now you're compounding on a higher amount, whether or not you left the money in there or took the money out. Everybody needs to learn what compound interest is because Albert Einstein explained that well. Those who understand it earn it. Me, Stephen, some of you. Those that don't, pay it. Most of you. You don't understand compound interest. So if you're making money on money that's continuously always growing, uninterrupted, and you're taking it out at a rate that is lower than what you're making, who's winning? You are. You just won. So those are the numbers, okay? But then let's get really like into the terms. So like Lisa, let's use her example where she bought a car using her private bank. When she took the money out, she already was making money even though she took the money out because she makes that spread. And every year, her spread gets bigger and bigger and bigger, not because of anything Lisa does, but because of compound interest. That's just how it works, folks. It just goes up and up and up and up and up, and you don't have to work any harder for it. It's a pretty fucking cool thing. So she takes the money out and she buys the car. But then instead of just being stupid with her money, she treats her money the same as she would have treated the bank's money. And she then pays her bank back a monthly payment, the same dollar amount she would have paid to any bank that would have, given her the money for the bank or for the car. So when she pays herself back, she's paying herself back with interest. So let's say she could have went to Bank of America and got a car loan at 3%. She's paying herself back the same payment with 3% interest. So now she's first made the spread from what she's making from the insurance company to what she's got to give back to the insurance company in interest. She makes that spread, which gets bigger every year. So she's winning more and more every year. But then she makes a true 3% because she's paying herself back a payment for the car equal to whatever the bank would have charged her. 1, 2, 3%, doesn't matter. She's the bank, folks. She sets the terms. She's in control of her money. Then the other thing, BB Singh said, but what if you don't have the money to buy the car or whatever else to become the bank? This is a great question. And BB Singh, man, I love your questions. You're on fire today on TikTok here. Instagram, I don't know. Everybody just keeps saying they love me. And that's cool by me too. But hey, let's get some good questions coming in from Instagram too. So BB Singh, if you don't have the money to buy the car, and many people are in this boat, the bad news is you have to capitalize your bank. So there isn't a bank that's ever been opened out there that didn't have initial capitalization. They didn't have initial money that they started their bank with. And I mean traditional banks. So if you start your own bank, you might be like I was when I first started, and it was a long time ago, where you just have to start capitalizing the bank slowly. And how I did it with about my first banking policy was about $230 a month, way back when I didn't have the money that I have today. And what I did is I just over time kept building up my bank until I did have enough, which was about 4 years after I started. And I have 8 policies now, but 4 years after I started, I had enough money to buy my first used car. And then I started practicing that. So Lisa would have had to have had the money in her bank to be able to do this. So I'm not saying this is for everybody. And I'm not saying everybody can get all the money back for every car they buy, drive, and own. But that's actually not true because they can, but it's going to take you time to capitalize your bank. So hopefully that helps. Marquez says here on TikTok, which companies do we work with? Well, we work with some of the largest mutually owned insurance companies there are out there. To name a few, Mass Mutual, Lafayette Life, One America is a really good one that we use. Penn Mutual on rare occasions, and some other good ones that you can use are Guardian. That's a commonly used one. So just to kind of give you a couple, but this is what we do, folks. We only do this. If you want help with this, watch the 90-minute video, go to chrisnaugle.com or join Stephen today on the Wealth webinar and learn how to do this. So if you're on TikTok, I got so many videos on TikTok, just watch them. A bunch of videos on cars on how to do this. So it's not about the company. It's about the concept. It's about how it's designed. Too many people ask like, oh, what company do? They run out to their advisor, say, hey, I want one of those those whole life or those specially designed whole life policies with Mass Mutual. And your advisor just sells you a regular whole life, and you look at it and you're like, man, this thing looks like crap. That Chris Naugle guy was lying. I'm not lying to you. Your advisor just doesn't know how to do this. Or your advisor doesn't want to give up 90% of his commission to basically do it the right way for you. It's one of the two. Okay. More than likely, they don't know. So don't just think it's about the company. It's about how the company and how we design it. Let's see. So how many advisors rake people for commission? Sammy on TikTok. Great question. The answer, probably way too many. And I'll speak from an old advisor standpoint. It wasn't their fault. They're just not shown this. They're not shown how they can give up their commission so that their clients have more money to use. So how many advisors rake people for commissions? I don't know if that's a true statement. I don't think they're intentionally trying to rake you for commissions. But if you're an advisor, if you put yourself in their shoes, they're trying to sell you a product that pays them the most amount so they can feed their family, put Christmas presents under the tree, because they haven't yet learned that the goal and the number one thing if you want to become wealthy is to solve more people's problems. They haven't understood the scale.
Chris, I can talk on that too, from a firsthand perspective. Out of college, I got recruited by Ameriprise Financial, which at the time was American Express Financial Advisors. And they basically told me, hey, if you can pass your Series 7, your Series 66, and your life and variable annuity insurance licenses, then you'll become an appointed financial advisor with us. So I studied, I passed the test. I became a financial advisor with them. I worked 65 to 75 hours a week. The majority of that was cold calling people, reading scripts that they gave me that they told me to memorize and learn. I would then meet with clients with the senior advisor in the room, and they would pitch them on Ameriprise's products. They would have trainings with us, hours and hours and hours every single week, teaching us Ameriprise's financial products. So all I knew was Ameriprise's financial products, what we offered, and what we were told to sell people that made sense for them. You know what I mean? And so it's not in most cases, it's not the fault of an advisor, of what they're doing out there. It's just what they know. You don't know what you don't know. So if you're giving financial advice that you're told by this large financial institution, American Express is the absolute best advice you can give to somebody with this financial plan, why would you ever think that's not a good idea? So as an advisor, it's just you're taught one thing. That's what you do your entire career. And then you move up, and then you start helping the new advisors. And then you move up to management, and then you run a couple offices. But you're still doing the exact same thing you were taught on day one. So to learn things like privatized banking, like private money lending, like how do private funds work, like all this stuff, real estate investing, you have to go out there and seek it on your own, because nobody's going to teach it to you from a corporate perspective, because there's no money in it. The only way to make money in is by doing it the way that we do it, by just sharing the information and letting people make their own decisions. So I don't think it's a fault of the advisors, or they're intentionally raking people over the coals. Maybe there's outliers, of course, but for the most part, it's just the way the system's created. And one thing that we know as a fact, the system doesn't work. According to the Social Security Administration, 95% of people in this country will not be able to retire at the age and lifestyle that they want to retire. So that tells me that 95% of the system is broken, doing it the way that we've been told to do it our entire lives.
Oh, man. Bravo. So Stephen couldn't have put that any better, folks. And I hope you guys were listening. I know a couple people over here on Instagram actually commented listening. You should have, because it's not so much that the advisors are doing wrong by you. It's just they're literally drinking the Kool-Aid. Their only knowledge base is what they've been taught, just like all of you. The only thing you know as truth is what you've been taught your whole life. But it doesn't mean that it's true. It's just all you know. And until you stop and you start to seek the truth, you start really taking the rosy-colored glasses off, like I had to as an advisor. I had to take the glasses off and say, wait a second. Is what the wealthy are doing, even though it's different than everything I was taught to do, is that the truth? Or is what my brokerage is teaching me to sell the truth? I had to make a decision, and I had to figure out a fine line. I had to cross that line and say, which one is real? And what I found is what I was taught as an advisor, although not all useless knowledge, was there to solely serve Wall Street and the brokerages, to make them money, not to make my clients more money. It was to make them money first, and then make me money second, and then make my client money third. Do all of you realize that is broken? It should be to make our clients money first. Clients' goals and problems and solving them should be number one. Then it should come back to, yes, maybe the brokerage making money, and then us last. You have to stop living in a world where you take, and you have to start living in a world where you give. The more you give, the more you will get, the more money you will make, and the more wealth you will have. Guaranteed. No ifs, ands, or buts. It's a law. So then the second thing, one more comment, Stephen.
If things were set up that way, though, how would the Morgan Stanley CEO be paid $33 million last year?
He wouldn't. He'd probably be making $2 to $3 million. That's not a bad living, but hey, listen, sometimes you got to let the cards lie where they are. So here's the problem. The problem isn't so much that the advisors are lying or trying to rake you over. It's just they're teaching you from a pool of knowledge that they were given from the brokerage, which is self-serving to the brokerage. The problem with advisors is because of their capacity, because of their status, because they have the licenses and they're called the financial advisors, they have arrived. For any of you that don't know, I have a great podcast. I have 2 podcasts, actually. One is called The Real Estate Money School, and one is called The Chris Naugle Show, which is a celebrity show. But I just did a awesome, and I don't ever mean to toot my own horn, but an awesome podcast on what I'm going to tell you next, called The Arrival Syndrome. It launched today. So if you guys follow podcasts and you want to listen to something really good with me yelling and getting really excited, if you like that, then watch that podcast. It's hitting today. It's The Real Estate Money School. But the problem with advisors is not their pool of knowledge, is not that they're doing something wrong. The problem is that they have arrived. They've literally gotten to a point of ego and of, just a knowledge base that they think that they know everything. And there's nothing more that they can learn. So they have literally shut off their learning capacity, their creation capacity, because they think they know everything. And if something new comes into their world, like what we teach with the infinite banking concept, it's a foreign object. And they try to kill it. They try to squash it without even understanding it, without even knowing what it is. They try to destroy it. It'd be like trying to destroy a virus without understanding what the virus is and how it operates. You're never going to do it. But that's how their minds work. Their minds, because they've arrived at this level that they can't learn anything more, they shit on things that are probably best for their client. But because they don't know it, they don't have the skill set, and they're failing to go out and research it. Not all, like CFPs, I love, because they have a fiduciary capacity to their clients. So if their client brings them something, they might have an opinion on it, but their duty as a fiduciary is to go out and seek the knowledge and say, yes or no, factually, does this work for your specific needs? I love CFPs, and we do a lot with CFPs because they are some of the only advisors that actually are open to learning more, because they have to, because they have a fiduciary capacity to their client to learn it. Not all CFPs are good. Some actually don't do this, but most do. So I just want you to understand that your advisor just has arrived at a level where they don't want to learn anymore, and it's sad. So let's see. Trevor White said, I love the example of the Ford Focus in the book. That's awesome, man. Thanks. We still got people saying, which company do you like to make for IULs? We don't do IULs. We don't support IULs. And we don't like IULs. And yes, Trevor, I am going off. Of course, that's just the thing. Scott, we're talking about lots of things, not just life insurance. You must have came in really late, because we've been talking about the markets. We've been talking about crypto. We've been talking about Fed policy. And now we just got off on a topic on where we're talking about privatized banking, which just happens to be using specially designed and engineered whole life. So I think we got all those questions. Cynthia said, ask backwards. You're darn right it is, but it's self-serving to the brokerages. So that's how it works. Let's see. J. Michael Smith here on TikTok says, I do not sell IULs, only whole life with mutual companies. Kudos to you, man. Obviously you've decided to take off the rosy colored glasses and learn that there's something more to this. And I think really it doesn't need to be a big learning curve for all of you. Why? Ask yourself this one question. When you're really deciding, is it an IUL that works best for you or a whole life? I want you to ask banks. Some of the smartest financial institutions, I'm not saying the most ethical or the best, but they are smart when it comes to money. What are they buying? What are they buying for their tier 1 capital? Is it IULs? Look it up, folks. Absolutely not. Banks do not like IULs. They sell you IULs, but they don't buy IULs. What do they buy? They buy BOLI, bank-owned life insurance. What is BOLI? Look it up, folks. Whole life. Not the same whole life you would buy from your broker, but the whole life that we design, specially designed and engineered whole life, that's what they buy. And how much of it do they own? As of 2019, Stephen, correct me if I'm wrong, I think it was 192 billion and climbing. So do you think banks are stupid, or do you think they know something you don't know? And why aren't they buying IUL if everybody's shoving IUL down your throat? Just wake up, folks. Wake the fuck up. and start learning what the truth is and stop living the lie. But hey, if you want to live in the metaverse and you want to live the big lie, this show isn't for you. Or you can just come on here and we'll argue with you the entire show. Pick whichever one you want. So good job, J. Michael. I love it. What else we got, Stephen? Or are we out of time?
Yeah, I think we're wrapping up. All
right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel. And don't ever forget to smash that alert button. We'll see you on the next one.